Hi there, Dwayne Cavanaugh here, and I'm a licensed mortgage agent in Ontario, Canada, and we're going to be talking about reverse mortgages today. We'll be spotlighting the lenders that provide reverse mortgages in Canada and talking about some of their products. And in the end, near the end of the presentation, we will be talking about some of the frequently asked questions and topics that come up regarding reverse mortgages. So let's just jump right in. Before we get into the lenders and their products, let's start with what a reverse mortgage is. So a reverse mortgage is a loan that's secured against the appraised value of your home. It's designed for folks that are 55 years and up, and it enables you to convert up to 55% of your home's value into tax-free cash. And you can do all of that while staying in your home. Unlike traditional mortgage products, though, you do not have to make any payments. In fact, you don't have to pay the loan back until you move or sell. So it's also easier to qualify for a reverse mortgage than it is other lending products. And that's because they're not looking necessarily at, your GDS or TDS, and this is your debt servicing ratio. They're not looking at your income. They're not looking at your credit score as much, although they'll look at your credit score. What they're looking at is the home, the age of everyone on title, and the type of home it is, the location, and then of course the appraised value. And they're making the decisions based on those factors, not necessarily your income. Okay. So let's also talk about how you can use those funds. So one way to use the funds really easy is you can stay in your home, right? So you don't have to downsize. You can retire in your home, get access to that equity, and still not have to make any payments and have it impact your cash flow. You can use it to boost your retirement income. So let's say you need an extra $1,000 per month. You can do that, and we'll talk about the different products. You can use it to help relatives. You can use it to renovate your home. So if you want to make some changes to your house, you can use it to pay off high interest debt. You can use it to cover your healthcare expenses, like including in-home care, or hey, even use it to buy a cottage if you want to buy a cottage. So let's jump right into the different lenders. So we have three in Canada that I'm going to talk about today. From left to right, we have Home Equity Bank. That's number one. Number two, we have Equitable Bank, and then number three, we have Bloom. And I'll talk about all three of these lenders. We'll start with the top player in the space, and that's Home Equity Bank. They basically pioneered the product and they've provided CHIP reverse mortgages to Canadians 55 years and up for over 35 years. Home Equity Bank focuses primarily on the reverse mortgage products. They've been doing it the longest. They have the most experience, and I would say out of all the lenders that folks are using on my team, I would say they're probably number one. Next up, we do have Equitable Bank, and Equitable Bank named themselves the Challenger Bank, so Canada's Challenger Bank, and they even trademarked that, which great. And you can see that by how aggressive they are. So they come out lower priced in interest rates. They come out with very competitive prepayment privileges and charges. So they're trying to earn your business. So they're a good option as well. And then the last one on the page here is Bloom. They're relatively a new player in the space. And unlike the other two, they're not Schedule I banks. Bloom is an actual fintech company. So three different options, three different companies. You've got lots of options there, but let's dive in and start looking at the different products. So when it comes to mortgage products, they're all typically built based on the purpose of the loan. So whatever you need the money for, that's basically how the products are created. So for example, let's say we have a single female retiree looking to supplement her income by about $1,000. So she wants $1,000, wants to golf a little bit more, wants to go out for dinner or lunch with her family and friends a little bit more, but doesn't want to take it out of her investments or her savings. So in this case, the Income Advantage product would be a pretty good fit. So Income Advantage provides a steady stream of income to boost your existing retirement income, and you get to determine exactly how much you want to take out and how frequently you want to get those advances. Okay. So on to the next one with Home Equity Bank, and that is the most popular one. That is a CHIP reverse mortgage, and we'll use another example for that. So let's say we have a couple in retirement, and they want to do a couple things. So the first thing they want to do is they want to gift some of their money into a living inheritance, and that's basically where you're giving your kids and grandkids their inheritance now, as opposed to waiting until you die, and that way you get to see them and experience them using that inheritance. So let's use this as an example. So we've got these folks in retirement. They've got kids that are looking to buy a house, and they want to help them buy that house with a down payment. But those kids have grandkids that are going to go to university or college eventually, and they want to help with that as well. But they don't want it to impact their cash flow. They don't want to deduct it out of their portfolio and their investments that are already growing. They want to do it in a way that isn't going to impact those things. So in this case, the CHIP reverse mortgage could work, because with the CHIP reverse mortgage, you have more options. So for example, they could take out a lump sum of $100,000 to help their kids with the down payment, and they can pull out $1,000 per month that they can deposit into their grandkids' RESPs. So that's where that product comes into play. And remember, the money that they take out would be tax-free. It's not going to affect their OAS or CPP, and there is not going to be any impact to their investment portfolio, right? And then next we have the CHIP Max, and this product is designed to give younger clients more immediate access to the percentage of their home equity. So at a first glance, the reverse mortgage product and the CHIP Max, they kind of look the same. But where it differs is, for example, if I'm younger, if I'm in my late 50s and I'm looking to get a reverse mortgage, because I'm younger, I'm going to qualify for less. So you can get up to 55% of your home's value. But when you're younger, you may only get 15% or 20%, right? So let's say I did need a little bit more. That CHIP Max product is there for those types of people. And you'll see by looking at the interest rates that the interest rate's going to be a bit higher on the CHIP Max product versus the reverse mortgage product. And that's where the difference is going to lie. Next, we have the CHIP Open. So let's say we have a couple that, and we'll use an example of this. Let's say we have a couple that inherited a business, okay? Business did okay over the years, but the last 3 years not doing so well. Cash flow is not great, but they want to keep the business within the family and keep it as a legacy for maybe the grandkids and that sort of thing. And in order for that business to succeed, maybe they need to invest in that business and they need to buy machinery to do it. So the CHIP Open could be a good product for that. Now, there's lots of options, right? You can go to a bank, get a business loan. You can go to the manufacturer and finance the purchase through the manufacturer. Those two options, you need to make a payment. The difference with the CHIP Open is you're not making any payment. It's not impacting your cash flow, right? So that's what that product is for. It's for short-term loans where you don't want your cash flow impacted. The other thing too is if for example, the business, let's say it didn't do very well, you invested and you're selling off the business, and let's say you want to convert that into a reverse mortgage, you can. So you can pay it off or you can convert it to a CHIP reverse mortgage as well. Okay? All right. So you're going to find, whether it's Home Equity Bank or Equitable Bank or even Bloom, they're going to have online calculators, reverse mortgage calculators, that are going to give you an example of and illustrate how this is going to work. And I do really like both the Home Equity Bank and the Equitable Bank's reverse calculators. It's really simple and easy to use and navigate. So as you can see on the screen here, we're just putting in the homeowner's age, putting in their genders. We're going to put in the postal code, the city, the type of home it is, and then what we think it's worth. Now, remember, this is just for illustration purposes. You need to get an appraisal to get the full value. But you hit that calculate button and then boom, it's going to spit out a really interesting graph that's going to give you some information, give you an rough idea of how this is going to work. It'll show you what your home is worth today, how much loan you're taking out today, and how much interest is going to be today versus 15 years from now, right? And gives you that example. So it shows you, the reverse mortgage amount, the loan amount, the interest that you're paying on it, as well as the value of the home, right? that you're going to have 15 years from now. So just a good example. You can see that on their websites if you go to their websites. And what I really like about all of these lenders is they do publish their interest rates. There's nothing hidden here. Very transparent on how much the interest is going to cost you, very transparent on what the rate's going to be, also what any additional costs are going to be. It's all on their websites. They're not hiding anything, pretty straightforward. And you can see that on their websites there. All right, so now let's move over to Equitable Bank. Equitable Bank has 3 products that I can see on their website. They have the Reverse Mortgage Flex, they have the Flex Plus, and then they have the Flex Lite. All very comparable. The difference is you can see you're not going to get up into that 40 to 50% or above 43% of the value of your home until you reach the age of 70. So that's in your Flex Plus product. And so the minimum age requirement for Flex and Flex Lite is 55. But in order to get more value, you need to be 70 years old for the Flex Plus. For all 3 of them, the appraised value needs to be about approximately $250,000 minimum for all 3, and there's a no negative equity guarantee on all of them as well. The Flex and the Flex Plus will allow you to take both a lump sum, and you can also schedule those advances. But the Flex Lite, that's just a lump sum product. Okay, and then the prepayment penalty charge. Let me tell a story, and this goes for all 3 lenders. They're all going to have prepayment penalties, but let me just tell a story about this. So let's use an example. So let's say we have a couple. They get a reverse mortgage. Okay, they're going to get it at the age of 62 because they want to cover the gap between 62 and 65 when they start pulling out their CPP. So let's say in year 2 of their reverse mortgage, unfortunately, the husband passes away, and the wife decides at that point to sell the house and move in with her daughter. In this case, just like any other mortgage product, if you break the product before the term ends, there's going to be a prepayment penalty. And in this case, as you can see on the screen for Equitable Bank, it's 4 months interest. 4 months interest is not too bad to break the penalty. And just like below, you're going to see the setup fee. Just like alternative mortgages as well as private mortgages, there's typically a fee. So you're going to see a lender fee on that. You're going to see, sometimes you're going to see a mortgage agent fee on that. Could be 1%, could be 2% for those fees, could be more. But what you're going to see with the reverse mortgage, they're going to have those fees too, but they're transparent. They're right there on the website. I appreciate that. You can see how much it's going to cost, right? So for Equitable Bank, it's $995. And then in addition, you're still going to have to pay for your appraisal, which is $300 to $600. You're going to have to pay for independent legal advice. You're going to have to pay for the closing costs as well. Equitable Bank also has a really cool calculator, simple and easy to use. Answer a couple quick questions. You don't have to fill out a bunch of personal information to do it. And they'll spit out the same type of graph where they're going to show you, the home value today versus the home value tomorrow, your mortgage amount, your interest that you're paying, and what remaining equity is estimated it's going to be. What I do like about the Equitable Bank graph, though, is you can click on any one of those years, and it'll automatically calculate the amounts, which is neat. So you can do that on their website. Very simple and easy to do. They also have, like Home Equity Bank, Equitable also has all their interest rates and their fees. Again, very transparent, like that a lot. And then when we move over to Bloom, unfortunately, Bloom is not as in-depth on their website as Home Equity or Equitable Bank. Pretty straightforward, simple product. Looks like they've got one, which is the Bloom Reverse Mortgage. And then they also have their interest rates on there as well as their fees. So that covers off the product portion and the lender portion of the presentation. Now I want to talk about some of the frequently asked questions that folks have about reverse mortgages. And this could be, people interested in reverse mortgages for themselves, whether it's family members that are looking to get some more information on there. It could be accountant, it could be a financial advisor. All I'm trying to do here is just provide you with some answers to some basic frequently asked questions. So let's start with, how much does a reverse mortgage cost? Okay, and how does that compare to other mortgage products? And I thought this was a really good graph to use. I found it on Home Equity Bank's website, and it gives you a good visual, right? So if you ask yourself that question, okay, how does it compare to other mortgage products? Well, an insured mortgage, and this is an insured mortgage, so you're gonna have to pay an insurance premium on top of that. Those are roughly around, say, 4.6 today, right, for a 5-year fixed. And then an unsecured line of credit could be anywhere between 7% and 13%. I know I'm paying 10% roughly for my business line of credit. So it's roughly in the middle, like somewhere in the middle there. However, if you look to the right, there are other more expensive options. And I want to put this into perspective. Okay, so, and this is how a reverse mortgage differs from a regular traditional mortgage. If I go to get a mortgage, I'm going to pay, part of my monthly payment is going to be going towards principal. It's going to be going towards interest. I got a, maybe it's a 5-year term. Over that term, I'm going to pay that amount of interest over that 5-year period. However, I could be paying this off for the next 25 years. So every 5 years, I'm basically renegotiating the terms of the mortgage, okay? With a reverse mortgage, it's a little bit different. So a lot different. With a reverse mortgage, you're not making any payments. So here with a traditional mortgage, eventually you're not going to pay, you're not going to owe anything on that. Whereas with a reverse mortgage, when you pass away or you sell the house, so mean everyone on title passes away and or you sell the house, that loan needs to be paid off, but so does the interest. And the interest is growing every year. You're paying interest on interest, right? Because you're not making any payments. Okay, so that's where a lot of people have concerns with it being a high cost, because it is a high cost. Okay, next question I'm going to answer is, can I get a reverse mortgage with bad credit? Of course you can. So unlike traditional mortgages, we're not looking at your debt servicing ratio, we're not looking at your income, we're not looking at your beacon score, although they will run a credit check. The lenders are looking at the age of everyone on title, they're looking at the home value, they're looking at the location, the type of home, that sort of thing. That's what they care more about than your beacon score. Okay, so yes, people with bad credit can get a reverse mortgage. With a reverse mortgage, who owns the house? You do. You always remain on title. The bank is never on title with your mortgage. Could I owe more money than the house is worth? Absolutely not. There's a no negative equity guarantee that all lenders have with all of their products. So we'll give you an example here. So let's say you bought a house in Hamilton many, many years ago. It's hot market right now, so that house is now valued at $1 million. For some reason, 5 years from now, it's not valued at $1 million, it's valued at $800,000, where there's a gap. There's $200,000 between what your house was worth before and what it's worth now. You wouldn't eat that $200,000, the lender would need to eat that. Okay, so there's a no negative equity guarantee. You don't have to worry about it. All right, what if I already have a mortgage on my property? Pretty straightforward. It's going to have to be paid off first. So a reverse mortgage will always have to be in first position. Can I get out of a reverse mortgage? Absolutely. So just like any mortgage, you're going to pay a prepayment penalty if you cancel the mortgage early. So prepayment penalties typically could be anywhere between a percentage of the total amount, or it could be 3 months interest, 4 months interest. You're just going to want to look at the terms and conditions. And that's why it's very important. And every lender has this requirement that you have to have independent legal advice in order to get a reverse mortgage. Your lawyer will walk you through all of that stuff. So will your mortgage agent if you're working with a mortgage agent. All right, so what are the fees associated with a reverse mortgage? I think I talked a lot about those. In addition to interest charged on money borrowed and the reverse mortgage itself, typically you're going to pay for an appraisal fee, you're going to pay for independent legal advice, and you're going to pay for the closing costs. Okay, so those are the additional charges that are going to be added to your mortgage. So that brings us to the end of the video. I know it was a long one. Thank you for sticking around. I really appreciate it. If you have more questions about your reverse mortgage, please reach out. My contact information is in the description below and also on the screen you can see here. Bye for now.